Hey friends, Lucian here with the Bullish Bears team. This video is going to be about OTC stocks. I'm going to explain what they are and let you know if they are safe to trade them. So the first thing that you need to know about OTC stocks, and actually the main thing, is that they're not sold on the major stock exchanges. This is very important to realize. The reason why they're not listed on these exchanges is because they don't meet the qualifications. So basically, the reason why they're not on these exchanges is they're not good enough. They don't meet the standards. They have a history or they're prone to pumping and dumping, whether it's intentional or unintentional. They might have crazy things like name changes. You'll see notorious, especially with the pot stock sector, which is known for lots of pumping and dumping and these OTC stocks. You might see a pot stock right now that's labeled pot something or marijuana something. And in the past, they may have been labeled a car parts company, right? So you're like, what the heck is a car parts company now selling pot stocks, right? Well, what happens is they can change their name and new traders will come in, ones that don't have, big brokerage accounts or they want to get into penny stocks and they're like, oh, I want to go buy those cheap penny stocks. I don't have a lot of money, so I want to go buy the cheapest ones. And they'll go to like a research tool, they'll search those micro cap stocks, and you'll see these sub $1 stocks, and they're like, oh, okay, the marijuana sector, I hear that's going to move. So let me search the marijuana or pot stock sector, and they look at those really sub $1 stocks and they're like, oh, wow, this one's 5 cents or 10 cents. Let me buy this. I'll buy 10,000 shares or I'll buy $1,000 worth. And then that stock's going to go to the moon, right? Well, sometimes it could, right? You can, if a sector's moving overall, the stock can move up, like those sympathy moves, right? So if the overall, let's say, pot stock sector is moving, then that stock that you bought at 5 cents, maybe it moves up to 10 cents, 15 cents, 20 cents. So that's a way that can happen for sure. But that's more of the exception. It's not the norm. So you could hit some home runs, but overall you got to be very careful. Just buying randomly these cheap stocks, these sub $1 stocks that are pink sheets are very risky. They're prone to things such as lack of volume, right? You need liquidity to be able to get in and out of a trade. Very important. They're prone to occasional spikes of volatility up and down, but because they behave this way, you need to know how to trade them safely, right? You need to know support and you need to know resistance. We say it over and over again: buy low, sell high, buy at support levels, sell at resistance levels. Especially with the pot stock sector, right? It's also called buy the rumor, sell the news. Buy low the rumor, sell the news. And that's why, like a stock, the stock sector like pot stocks, it's notorious for pumping and dumping, right? But because the stock, the chat room pumpers will pump it up and then they sell the news, right? So the good news happens, and then many times the stocks just dump off. So why did that happen? The new traders are buying the news. They're not selling the news. The professional traders are buying the rumor, they're selling the news, but the new trader comes in, they hear the news, they're buying the news at tops, and then it ends up dumping down, and then they're left what they call bag holders. So as you know, or you've probably, if you haven't been around for a while, being a bag holder is not fun. That's when you're putting your money and you're buying at tops and you're sitting there waiting to eventually get a profit. And with these micro caps, these OTC stocks, especially in pump and dump sectors, you can end up holding them for months, if not years, hoping your money comes back. So you got to be very careful. So are OTC stocks safe? Well, typically they're high risk micro stocks, right? They're very risky. And because they're high risk, they're not subject to regulations. In other words, they're basically like the wild west of trading. They're kind of a crapshoot, right? You can put some money in and get lucky if you don't know what you're doing, but we don't recommend trading that way, right? We recommend learning where to buy low and where to sell high. So again, it doesn't mean that you can't trade OTC stocks. You just have to be precise on how to trade them. That's why technical analysis and learning it is very key. That sub $1 area is very key. You'll see a lot of these stocks, they try to push that dollar area. So that's where a trading strategy like, that dollar range, those stocks that are broaching a dollar, that's where typically a lot of these stocks will get delisted when they fall below a dollar, and then they try to push up over a dollar. So you can see that tug of war with those stocks. So that's why a lot of times pay attention to stocks that break out from sub $1 and get above a dollar. So that dollar level, very key when trading, and especially with penny stocks, those whole and half dollar amounts, very, very important to pay attention to for support and resistance levels. And then those dollar breakouts, very popular. So again, trading OTC stocks is a whole arena for doing this. Just be aware, again, like with anything, whether you're trading a small cap penny stock or a large cap stock, you need to know support and resistance. You need to know the areas on where to buy low and then also where to sell high.